take a live look at the Dow. It's about 100 points up right now. Markets looking pretty flat this morning. With us, CBS News business analyst Jill Schlesinger to talk all Money Watch news. So let's start with bank stocks taking a hit yesterday after some earnings reports were released. So explain what those reports actually showed.
Nothing.
Okay.
To the average investor,
Goodbye, Jill.
This is literally noise, and you need to tune out the noise. So, listen, some of the banks had to report earnings, which accounted for some unique circumstances at those banks. This morning, we had Goldman Sachs and Morgan Stanley, and they were very robust. And these stocks have been on a tear. They don't tell you anything about the U.S. economy, except they do tell you something about the political environment. And that is that banks are doing extraordinarily well under the Trump administration. There's lower regulation. And stocks have gone up. There's a lot of trading. There's a lot of activity. And there's more mergers and there's more acquisitions. So there's more business. But if you look at your own 401k, I beg you not to look at these earnings. It is useless. It is a waste of your time. You focus on your own financial goals, how you're going to get where you want to go. What is the best way to get there?
So, Jill, staying on the subject of banks, something we talked about last week, the president is proposing a credit card interest rate cap to about 10%. And on the one hand, if you are a consumer, this sounds like a good idea because credit card interest rates are over 20% right now, or almost, 19.65. And if you hear that the interest rates will only be 10%, that sounds good. The question that I have is, let's take a look from the bank's perspective. And I know people will be watching and they'll say, well, who cares about the banks? Those are billionaires who run them. But if the banks see a cap like this, what do they decide to do in terms of how much credit they offer people? And what do they decide to do in terms of the revenue that they generate from all those interest rates?
So the lobbying for the banks and the credit unions came out very hard against this proposed cap. And they have come out hard against caps in the past. There have been some bipartisan efforts to get some caps going on credit cards. And the reason is their premise is, hey, if we are asked to lend money, which is extend credit to someone who is a low earner or has a shaky credit score, we need to get compensated for that risk. What if they don't pay us back? Makes sense, possibly, sure. At the end of the day, I think there's also a problem that when you put these caps in place, they're usually short term. Maybe it's a year. I mean, it is helpful. You'll take it for a year. I get it. But it's not the answer for most people. So I think from the bank's perspective, I think they were a little heavy-handed. I think they probably should just keep their mouths shut and do their lobbying as they would normally do and not put these statements out because it makes them look kind of horrible. Like, oh, if you put it at 10%, we won't give credit to those people.
And we won't make as much money,
and we won't make as much money. Like, who cares what they think?
But the ripple effect could affect, for example, if a bank says, okay, we've got to cap these interest rates at 10%, that means we would have extended $10,000 to somebody. We're only extending $5,000. Now the consumer goes, well, I was going to spend buying stuff.
There are two impacts potentially. One is if I don't have the credit extended to me, I will not spend the dollars in the economy, and that'll be a hit to growth, right? That's rational. Or if I do have to go get money and I do want to spend in the economy, I'm going to go to this unregulated, weird part of the economy where I'll get money. Maybe it's buy now, pay later. Maybe it's going to private lenders. What I think is important here is nothing has been done yet, and we don't have any contours or details. If you are someone who is carrying a credit card balance, and we know that I think 47% of people who have credit cards are carrying a balance. By the way, that's down 11 percentage points from the decade before. Wow. So we're making progress. Good, I think a lot of people understand carrying a credit card balance is going to harm me. I need to figure out a way out. I would not bet on the government giving you that option to get that bailout. So you're going to have to do the hard work. It takes time. It took a while for most people to gather up all that debt. So don't expect that it's going to, boom, just get paid down a little bit at a time. Highest interest first, work your way down. Some of the folks who come on the podcast, they are like incredible. They're the reformed debtors who turn into amazing savers. All that money that was going to pay down debt, they immediately, once they get out, they then take that money and put it into saving and put it into retirement. So there is a way out. It will be better if you can do a little bit at a time.
Okay.
Good advice,
you heard it here first.
as always.
Jill, thank you.
Sure.